Have you ever wondered what happens to wealth during times of hyperinflation? We hear about it in history books: Germany in the 1920s, Russia with the collapse of the Soviet Union in the 1990s, Venezuela just a few years ago. Prices skyrocketing so fast that what costs $10 in the morning might cost $20 by night. People lose their savings, their homes, their purchasing power. But here's a question most people don't ask. While the majority struggle during hyperinflation, how is it that a small percentage actually manage to come out wealthier than before? Today, we're diving deep into a crucial topic: how you can position yourself to get rich during hyperinflation. This isn't about fear-mongering, it's about preparation. By the end of this video, you'll not only understand what hyperinflation is and why it happens, but more importantly, you'll have a clear strategy to protect your wealth, grow it, and potentially come out of a crisis richer than ever before. First, let's get clear on what hyperinflation actually is. Hyperinflation occurs when a country's currency loses its value at an extremely rapid rate. Unlike regular inflation, where prices increase by a few percentage points annually, hyperinflation means prices can double, triple, or even increase tenfold in a matter of weeks or months. Historically, hyperinflation has been caused by a few key factors. Excessive money printing. Governments facing financial crises often resort to printing more money. The idea is to stimulate the economy by injecting more liquidity, but when too much money is chasing too few goods, prices spiral out of control. Loss of confidence in the currency. When people lose faith in a currency's stability, they rush to spend it before it loses even more value. This creates a vicious cycle where demand for goods skyrockets, driving prices even higher. Economic shocks and political instability. War, sanctions, or political upheaval can cripple a country's production capabilities, leading to shortages of essential goods and services. When supply drops but demand remains, prices surge. Now, here's where things get interesting. During hyperinflation, most people's wealth, especially if it's stored in cash or savings accounts, is wiped out. But those who understand how to navigate the chaos can actually grow their wealth. Let's break down how. Before we dive into specific strategies, there's an important mindset shift you need to make. During periods of hyperinflation, fear and uncertainty dominate. People hoard cash, panic buy goods, and make rash decisions. If you want to get rich during hyperinflation, you need to see opportunity where others see chaos. Here's an example. During the German hyperinflation of the 1920s, most people were desperately trying to buy basic necessities before prices rose again. But a few savvy investors bought real estate, art, and other tangible assets at fire sale prices. When the currency eventually stabilized, these individuals found themselves holding valuable assets that had appreciated significantly in real terms. Your goal should be to remain calm, think long-term, and act strategically, while others react emotionally. Strategy 1. Convert cash into hard assets. One of the worst things you can do during hyperinflation is hold on to cash. As prices rise, the purchasing power of your money erodes rapidly. Instead, you want to convert your cash into hard assets, things that retain or even increase in value during inflationary periods. Examples of hard assets include real estate. Property tends to hold its value well during inflation. If you can, invest in rental properties or farmland. Even if property prices rise nominally, the real value often remains stable or increases over time. Precious metals. Gold and silver have been traditional stores of value for centuries. During hyperinflation, they act as a hedge against a collapsing currency. Commodities. Investing in essential goods like oil, wheat, or copper can be a smart move, as their prices often rise with inflation. Consider this scenario. Imagine you have $100,000 in cash, and inflation is running at 50% per month. In 6 months, your cash might only buy what $10,000 could have bought previously. Now imagine instead, you use that $100,000 to buy a piece of farmland. Even if nominal prices rise, the farmland retains its intrinsic value and may even generate income through crops or leasing. Strategy 2. Invest in businesses that benefit from inflation. Another way to grow your wealth during hyperinflation is by investing in businesses that thrive in such environments. Typically, These are companies that sell essential goods and services. Think food, energy, healthcare, things people can't do without, no matter how high prices go. Have pricing power. Companies that can easily pass on higher costs to consumers without losing customers tend to do well. Hold valuable assets. Businesses with significant real estate holdings, natural resources, or inventory benefit as the value of these assets rises. For example, during the hyperinflation in Zimbabwe in the 2000s, some local farmers and exporters who dealt in hard currencies like the US dollar managed to grow their wealth significantly. While most people were scrambling to buy bread, these entrepreneurs were expanding their operations. Strategy 3. Hold foreign currencies. If your local currency is rapidly losing value, holding foreign currencies can be a lifesaver. Historically, currencies like the US dollar, Swiss franc, or even cryptocurrencies have served as alternatives during times of hyperinflation. Here's how you can do it. Open a foreign bank account. If possible, open an account in a stable foreign country. This allows you to store your wealth in a more reliable currency. Invest in foreign assets. Consider buying stocks, bonds, or real estate in countries with stable economies. Use cryptocurrencies. While volatile, cryptocurrencies like Bitcoin have been used in countries experiencing hyperinflation as a store of value and medium of exchange. Strategy 4. Build a cash-flowing business. While holding hard assets is crucial, having a consistent cash flow can provide you with the liquidity needed to seize opportunities as they arise. But not just any business will do. You want one that can adapt to inflationary pressures. Here's what to look for in a business. Low overhead. Businesses with minimal fixed costs are better positioned to weather economic turbulence. Scalable operations. Look for opportunities where you can scale up quickly without significant capital investment. Essential products or services. Again, focus on things people need regardless of economic conditions. Think about starting an online business, freelancing, or offering consulting services. These types of ventures often have low startup costs and can generate significant cash flow. Strategy 5. Reduce debt, unless it's strategic. Debt can be a double-edged sword during hyperinflation. On one hand, fixed-rate debt becomes easier to repay as the value of money decreases. On the other hand, variable-rate debt can quickly spiral out of control if interest rates rise. Here's how to approach debt. Pay down high-interest debt. Focus on eliminating credit card balances or other high-interest loans. Consider strategic debt. If you can lock in a low fixed interest rate, taking on debt to buy hard assets can be a smart move. Just make sure you have a plan to generate income from those assets. Strategy 6. Invest in yourself. During times of economic uncertainty, your skills and knowledge become even more valuable. By investing in yourself, whether through education, learning a new trade, or building a personal brand, you increase your earning potential regardless of economic conditions. Consider this. In every economic crisis, there are individuals who come out ahead because they have specialized knowledge or skills that are in high demand. Whether it's digital marketing, software development, or even agriculture, having a valuable skill set gives you options. Hyperinflation may sound like a distant possibility, but history has shown us that it can happen quickly and without much warning. The key to thriving during such times is preparation. By converting your cash into hard assets, investing in inflation-resistant businesses, holding foreign currencies, and continuously building your skills, you position yourself not just to survive, but to thrive. Remember, wealth isn't destroyed during hyperinflation. It's merely transferred. The question is, will you be one of those who loses it or one of those who gains it? So take action now. Start small, stay consistent, and keep learning by subscribing to this channel so as to always be informed on these aspects. The future belongs to those who are prepared. See you soon.